Your energy is awesome. Like I think it's going to be such a fun afternoon and evening. And for me, it's afternoon. For you, it's evening. And I appreciate that you've been, you work this late, as everybody in Singapore is. But I got so happy now just getting your energy. This is going to be so much fun. So as Nico mentioned, I joined this company for almost 6 months now. So I've been working in fundraising for the last 15 years, and it's been extremely interesting. So I'm going to share a bit my screen, but I'm just going to give you a bit of background. As Nico mentioned, we in my previous company we launched basically the equity crowdfunding phenomenon in Europe, and we and a handful of other platforms basically in 10 years time established a new phenomenon, raised a lot of money to our clients, and eventually also changed the laws, which are important because anything new is frowned upon. Nothing really wants to change by itself. Legislation and current methods needs to be changed, needs to be pushed. And our approach was that, look, the old is good enough, but for very few. But look at the new one. Look at how we can do it. And as Nico mentioned, any investment um, in a startup has a lot of opportunities, but also issues. We funded over 650 companies with equity crowdfunding, meaning that shareholders invested in them, shareholders who invested hundreds of thousands of dollars on a ticket or $2 on a ticket, right? All depending on how who they were and what the company wanted. Some failed, of course, because some do. Some have succeeded. They exited. They are profitable. They took it to the stock market, and many are in the middle, still struggling, of course. But in equity crowdfunding and also in I'm just going to share my screen right now. In equity crowdfunding and in any funding, any investment in any startup, there are positives and there are negatives. And of course, the positives are that you get money and funding to build your idea, to try to fix something, to change the world. But we also see a major issue on the practicalities. Basically, once you raise the money, what are you doing? Let me give you an example. In equity crowdfunding, everything's cool, effective, global, normal, futuresque. But once you close, you need to basically use the same methods that people have used since the 1700s, meaning shareholding, cap desk management, a lot of bureaucracy, which is good, but it's extremely not effective. The worst case scenario I've been in was Italy. Italy was one of the most progressive countries in the world with new and good equity crowdfunding laws. They basically led the revolution on equity crowdfunding, and it was extremely effective and normal. But then they put another law which said that if you are investing in any company in Italy, regardless if you do it digitally or physically, you need to go to the local notary public, meaning that if I'm investing from Stockholm into a company in Italy, I need to go to Milan to stamp a stamp, which is extremely non-effective. And this is, of course, a crazy thing. But the reality is that any company who's raising funds, and especially startups, they are going through huge hassles. And for us, we see a lot of issues. First, the issues of the industry are shareholding is really not an optimal tool to reach your goals. You do whatever you can, but it's not really optimal. It is an invention from the 1700s, shareholding, and at the end of the day, it's just an agreement. And the shareholding is a good and solid agreement, but it basically dictates a few things, some rights and some responsibilities. And if I would tell you that we're using an invention from the 1700s still in anything we're doing, you would laugh, right? But in the world of finance, using old methods is actually something that a lot of people take pride in, which for me is an absurdity because our job is always to strive forwards. Our job is always to make something better. And also, if you look at equity crowdfunding, where you can have maybe 60, 200, 2,000 new shareholders, even 20,000 new shareholders like the Brew Dogs have, it's awesome out of the ambassador type of mentality, out of the marketing perspective, but it's a huge mess if you want to start dealing with cap tables or such. So you need to pay extra money for cap table services. So suddenly you have a complexity which is really strange. Another thing is, of course, that there's a lot of VCs who might do the post investment in a startup. They are frowning on, in quotations, the messy cap table. So there's a lot of people who try to solve this. the best solutions right now are companies like CapDesk or similar, who have modern cap table management tools. But the issue is still something which is old and ineffective. And I've been I've been always thinking about the utopian vision, and honestly, I didn't dare tell anybody that I was that crazy to think about the utopian vision, because when you are working in fintech and the financial sector, you don't want to ruffle too many feathers, right? So I had this idea, and I said, look, in the future, you don't need to become a shareholder to get the same benefits as a shareholder, and a company doesn't need to invite you as a shareholder for the company to give you the same benefits as a shareholder. And this was a utopia thing. I thought this is something that we might do, in the future, once we change our minds and once we have a generational shift. But when I started to talking to Technicorum Gravitas, I realized, wait a bit, we actually are already launching and are working on the future of funding, which is basically tokenization. So let's put it like this: shareholding right now, if I'm investing in a startup, I'm investing $1,000, $10,000, $100,000, all depending who I am and what wallet I have and what capacity I have and how interested I am. The formalities are these ones. First, I'm signing a subscription note. Then I'm transferring the money to an escrow account. Then the company needs to take a board decision. Then they need to have a bank statement. Then you do the governmental registration bureaucracy. Then that's approved. That's another board meeting. Then I'm being entered in the cap table, and then I'm a shareholder. And then they need to do investor relations with me. There's already 8 touch points which are necessary. All these touch points cost a lot of money. All these touch points are extremely ineffective. I've seen companies who raise a lot of money and the money can't be touched for 6 months because of bureaucracy, which is absurd. So not only the closing procedures are absurd, but also the post-investment management. Some investments take 5 years until you have an exit or a profitability or a bankruptcy, right? It takes 5 years to see where the company goes with your money. So we actually are already working on this, and there are a few who already started doing this, but I love being in the front run of a revolution, and I'm really happy of leading Technicorum as group CEO, who in itself is trying to lead a revolution. So if you look at the smart contract instead, a smart contract can actually regulate the same things you would get as a shareholder. It solves a lot of issues. As I mentioned, at least those 8 issues that I showed before can be solved. One board decision and one tokenized platform and one tokenized event, that's what you need. And you will get the funding, you will get 0 shareholders, you will get people who act like shareholders, meaning the benefits of it. And as an investor in tokenized event, you get the benefits of a shareholder without the hassles of being a shareholder, and you get all the future benefits as a shareholder. So that in itself becomes future proof. There's a lot of discussions right now. There's a lot of companies who are starting to think about their crypto strategies. And those companies who are not future proofing their investment strategies or their fundraising strategies, they will struggle a lot, because I think this is definitely going to accelerate quite fast. Another thing, of course, is a smart contract is a smart contract. It's not a share. It's not an asset. It can actually be traded from day one as a tokenized commodity or a tokenized asset if it's linked to a full asset. And also, if you are scared, let's say you're scared what the token can that the token can surge in price or drop in price, some tokens actually can be tethered. So for instance, I could tether a tokenized contract to a share or a founder share or the CEO's share. So whatever the CEO does with his shares or the founder does with his shares, that will affect my tokens also. So not only, as I mentioned, they are future proof, it takes your company to the next level and simplifies and also cuts a lot of costs. There's a lot of money to be saved in tokenization, but also, as I mentioned, these future proofing for your company. Another thing which is extremely interesting, any fundraising is extremely local. Even if you do equity crowdfunding, which is a global phenomenon, the majority of the people are local. It's friends and family, people from your own city, from your own country. Then, of course, you have some people from the other country. In the previous company that I was running, one of Europe's largest equity crowdfunding portals, in certain cases, 17% of the investors were non-local. which was something that we were really proud about. We were also one of the only platforms in the world who actually had global volume. We had Asians investing in Sweden, Sweden investing in Asia, Dubai people investing in a German company, Finnish people investing in a Spanish company. That globality is extremely awesome and extremely effective in fundraising, and also if they also work as ambassadors, because any investor, any person who gives you money, they most won't be passive. Most will help your company. Most will uh, add value to you as marketeers, as brand ambassadors, as fans, whatever, right? So if you want to be global from day one with global investors and be a truly global company, obviously tokenization is one of the most effective tools for that. And once again, I'm going to say this again because this is very, very important. All companies right now, most people right now need to think about their future. They need to future proof their strategies. Honestly, I could even tell you that not having a crypto strategy is having a strict crypto strategy if you actually thought about it. What would worry me a lot is, of course, companies who are not even realizing what opportunities are in front of them, and they're missing the opportunities. And then, of course, once again, this is something that I just said, but most companies right now, they need to start thinking about, okay, what is our crypto strategy? What is our blockchain strategy? Should we tokenize? Should we not tokenize? Should we have our own currency? How are we addressing that the world is moving this fast? I'm very happy to be in such a progressive company as we are right now, because we are one of the best companies in the world in this segment. I actually feel that what we are sitting on is extremely unique competence on legal, on how you build company, on strategies, on tokenization, and also we are running several tech segments, our own, including our own a company called the Tech Launcher, which does tokenized crowdfunding. And the point is for me, not only I'm happy about that, but also the crypto market as a whole has become so big, so it has passed pivotal point, meaning that there's no governmental body that can shut it down. There is too many people now engaged and involved, and I don't mean people who buy bitcoins or Ethereum. I mean people who actually are building companies on blockchain solution or on tokenized solution, or are starting to offer services. I am biased, of course. My eyes are painted by this revolution that I'm seeing, but it would be wrong of me and it would be bad of me of not sharing this vision that I'm seeing, especially since I'm coming from a field where we help so many companies fundraise. If you just think about it, we successfully fundraised over 650 companies, over 1,000 projects and several lending projects. That volume, just imagine how many jobs we created, how many solutions we put on the market, how much changes we inflicted on societies. Those things gives us a lot of expertise. And now when I'm seeing that tokenized crowdfunding is the future, or actually tokenization is the future, I'm getting extremely excited. And this is one part, of course. The other one is, of course, that in tokenization, you can also look at tokenizing your assets, like NFTs are being right now, like the entire art and creative industry is doing. You can also create your own tokens. The possibilities are truly enormous. They are not as scary as a lot of people think. And as I see it from a CEO, board member, or chairman perspective, if my company that I'm invested in, my startup, is not looking at the tokenized strategy or is not looking at the crypto strategy, I would be scared and angry. Because I think that most companies right now, especially startups who are raising money, they need to be smarter. They need to be more effective, and they need to use the most effective tools out there. There are three types of money. You have smart money, you have dumb money, and you have expensive money. Expensive money is when you raise money, but 20% of the funding goes to vendors. Smart money is money who just enters your account but doesn't help you. And what we are talking here about is smart money. It's money in your account. It's effective for your company. It gives your company an edge over the competitors, and future proofs you and takes away all the hassle. And also, as an end, I can promise you, if you are a startup here listening right now, I can promise you that your competitors right now are figuring out their crypto strategies right now. And as in everything in life, it's not the big ones who will eat the small, it's the fast ones who will eat the slow ones. So look, we at Technicore, we are a group, right? So we are A to Z ICO, IDO, ITO advisors. We we are running the Tech Launcher, which is our own tokenized crowdfunding platform. We, as Nico said, we are running the King Swap, which is a swap, an exchange. It's basically a fork of the Uniswap, which in itself is a fork of SushiSwap, which in itself is a fork of Uniswap. But also, in addition, we are also running our own currency, the King token, the King. It's listed on several exchanges, and it's listed since October 31st of last year. So take a look at that. And once again, we are here to help you. We really, truly, truly believe that we can help a lot of companies. So reach out to us, talk to us. Let's dig in deep and see how can we help you with your crypto strategy. So I hope this was a good introduction to today's settings. I just wanted to give you a visionary overall perspective. And I'm not, if there's any questions right now, I'm gladly going to take them. Otherwise, I'm going to leave my space now for the next speaker or to Nico.
The early days, 2012, I still have the Mt. Gox crash in my head. And it was a completely different field at that time. But when Ethereum came out and smart contract arrived, I saw that it was going to disrupt my industry in a very deep way. So with my co-founder, we started Atato in 2017. Let me share my screen. I will go for it. I think it's going to be a bit more lively. I'm not going to bore you with so many slides, but just to introduce who we are and what we do and why it makes sense to talk about tokenization. So we've been founded in 2017, just before actually the bull market of that time. And today we are about 20 people. We are HQ in Singapore, but most of the team is based in Thailand. And for the past 4 years now, we have been building blockchain solutions for banks and financial institutions in Thailand and in Southeast Asia. So maybe some of the logos of those companies don't ring a bell, but this is large brokers or banks in Thailand mostly. And we've been involved with the Bank of Thailand on their CBDC project as well. So been the partner of Consensus, the largest blockchain company in the world for the past 3 years. So what we do, what we have done actually, it's building those financial blockchain solutions for banks. And for the past year, we have been offering basically, we call it Atato Digital Asset Platform, but it's a token issuance and management platform for banks. Basically, it's like a tokenization engine, but which is actually fully compliant with local regulations, which is what I'm going to talk a bit today. And on top, we are launching our custody services for digital assets. We are working with several large exchanges in Southeast Asia. So that's what we do. That's why we have been seeing the space of tokenization and I would say blockchain for financial institution moving, especially fast those past few months. But I just would like to give you kind of a practical example of what's going on here in Southeast Asia, what we have seen, what we expect the future to be for funds and financial institutions. So, you know, I will start with a very boring slide, and sorry for that. It's the regulation one. Nobody wants to hear about it, but this is actually one of the cornerstone of the blockchain industry those days. So, you know, we are talking about having masses of people adopting digital assets. It's not going to happen if regulation is not here. So for the past 3 years, we have seen regulators, not only in Southeast Asia, but in the US, in China, in Europe, trying to come up with some kind of regulation that will protect the investors, but also will try to enhance companies to adopt digital assets. It's been a tricky part, not to say the least. So I will talk mostly about Thailand because I'm quite confident on that one since we are based here. But to give you an example, Thailand since 2018 has been actually having a very clear regulatory framework on digital assets. There's been a royal decree emitted in 2018, which give basically rules and regulation for everyone in the crypto space. So if you want to issue tokens, you need to have a special license. If you want to be a crypto exchange, you need to have one as well. You want to be a fund manager for crypto assets, it's coming, a custodian the same way. And I have to say that even if people really in the crypto space generally don't really care about regulation that's been created by anarchists, right, at the beginning, it's unfortunately the way that it needs to go those days. And what we have seen for the past year, actually, in Thailand, is that since this regulation, banks, financial institutions, companies have been actually increasingly investing in the space. And today, Thailand is one of the country with the most adoption for digital assets. Decentralized finance is something that young people are actually trying at a very early age here, and people are very active in the community as well. So it has been thanks to the regulation that large companies, large banks are actually today going into the digital asset space. So again, I apologize for the people who don't know the Thailand setup very well. So, but there was something coming up in 2018, which was a regulation which allowed companies to basically issue tokens, and securities token and utility token in Thailand. So some of the pure players that you've seen on the right have been like startups, blockchain companies, looking into this regulation and say, okay, I would like to be a regulated, we call it an ICO portal, but it's more like a security token offering portal. So those pure players started, the regulation was still not very well fit for the market, so they didn't do much of those STOs. But what we have seen this year is that the two largest banks in Thailand, which is Kasikorn Bank and SCB Bank, have been officially launching their ICO portal, named Cubix and TokenX, and with the goal to basically issue tokens for middle-sized but also large-sized companies. So we are going to see in early 2022 people actually raising money through security tokens offering under the regulation in Thailand. And the funny part, and what this whole ecosystem is actually taking shape, is that the stock exchange of Thailand is actually going to launch a digital asset platform, which will be actually operate as a secondary market for the tokens that are going to be launched. So, you know, it's this ecosystem would not have been possible if the regulation was not there. And today we are seeing a massive capital inflow in Thailand on those companies, from the banks, from actually other large companies, to invest in digital assets because they do believe it is the future. So it's very nice to see that those big names are going in, and they are going in with a lot of capital. So you will not be too strange about what happened those past 6 to 8 months. We have seen the crypto market recovering compared to the lows of 2018. 2017, 2018, the bull run was mostly done due to retail investors, some young people putting money on ICOs, some people really deep in the tech. It was not the same space that we are seeing today. Today, we are talking with companies, institutions with a much higher capital flow to be able to invest in that space. This capital is coming into crypto, but it's coming to all the surroundings, companies, startups, blockchain companies, funds, which are going to profit from this inflow of capital. And this is, even if the prices are down those days and people are still not believing that crypto is going to be the future, we are seeing a drastic change in the way that people actually see blockchain and see digital assets. Now, there is no questions that digital assets are the future, especially if you're in a financial institution. The risk for them at the moment is not to be in it. So they are actually looking at purchasing companies, set up funds actually to invest in decentralized finance product, to invest in blockchain startups, to be able to start to understand the ecosystem and being able to actually implement what is being developed today to their very traditional finance business. So where is it going? Where we see the space going? It has been touched a bit by Daniel before. But for me, there is very one thing that I would like to talk about. It's about central bank digital currencies. It's for the state to be able to digitalize through blockchain their money, their currency. So it's going to take some time before countries like France, like Thailand, or even the US are going to go full digital on the. Are going to be a full digital for their money. However, all of the central banks are actually experimenting in blockchain. And the day that you have a CBDC, as we call it, it's going to actually push the development of the ecosystem in a very, very drastic manner. Everybody will be able to have a wallet on their phone. The moment you have a wallet, you have much more access to another suite of products, crypto funds, to decentralized finance, to a lot of an overall ecosystem that is opening to you. And for me, this is what's going to be the drastic change for the future of finance. Today, we are seeing crypto fund, we are seeing traditional securities like Apple or Tesla stocks being tokenized. To give you a practical example, in Thailand, we don't have something like Robinhood or any kind of easy broker. It's kind of difficult to buy Apple stock or Tesla stock. So a lot of brokers are actually trying to tokenize those foreign securities to be able to offer it to their clients. So just to give you, to wrap it up a bit, I think my time is up. Blockchain is here to stay. That's not a question anymore, but that's what we are seeing now. It's those big financial institutions, we are still on the learning curve. They are trying not directly to be involved, but through subsidiaries, through a technology company that they own, through investment in some blockchain startups, because they would like to understand how it works and how can it be implemented in their business. Funny thing is, when we started, none of the banks wanted to talk to us. And today they are all coming back and say, well, okay, let's talk again. We believe that these things has a future, and please tell us how decentralized finance is going to affect our business. So it's kind of funny, but it's I compare it to the early days of internet. I'm not that old, but I still remember in 99 and 2000 when people couldn't consider buying books on Amazon. So I feel a bit the same today, and I'm very hopeful for the future. So I'm very happy. I just wanted to give you an overall situation of something practical in Southeast Asia. And yeah, hopefully you gain something. So Nico, I hope I didn't took too much time, and let me know if that's okay.
Yeah, thank you so much, Maxime, for that one.
Your excitement. And I guess that's all good at this hour, right? I mean, luckily for me, it's actually still early in the day. But I know most of you are probably in the evening time. So yeah, great. I'm very happy to be here and chat and talk and share some thoughts with you about like DeFi versus CeFi. That's what the agenda says, but probably it's more DeFi and CeFi, because as one of my predecessors said, it's not a one or the other. It's about collaboration in this space we are in, and I think it's that's what brings us forward. I'm going to share my screen and then we'll jump right into it. Can you just confirm quickly if you can see this?
Yes.
Okay, great. Awesome. Great. So yeah, as a matter of introductions first quickly. So again, my name is Gregor. It's actually a German name. And you can probably pick up the accent as well, but I am not from Germany. I'm from the German-speaking part of Switzerland. And I'm coming from a very traditional finance space. I've been in fintech for almost 10 years now, but always around the regulated space. So I am only in crypto for maybe 2-3 years now. So that's fairly new. I built one of the first payments app in the Philippines. That was back in 2014. But my focus has always been mainly in emerging markets and how to bring financial products to people, you know, like people that don't have bank accounts, people that don't have cards, people that I guess lack certain financial literacy. So with that in mind, what I thought I'm going to share over these next 15-20 minutes or so I'm going to talk about some of the challenges and opportunities that we see around DeFi and also around CeFi. And then I'll also share some views of how we see financial services progress in the next years. And that's mainly, again, that's mainly with a lens coming from the experience around emerging markets where, you know, with the average person on the street not having a lot of expertise in this space. And then lastly, I'll also share how we are tackling this with Verso Finance and what this is all about. Okay, so to get started, I want to maybe take, let's say, a 35,000-foot view first and zoom out a little bit. What we've seen in fintech, I guess, in general, in the last several years is kind of first an unbundling from all these financial services that banks and other service providers used to offer. But we've now seen a rebundling as well. And this rebundling basically means a lot of financial services have been brought into user experience of non-typically financial apps. Like you can think of like the super apps, I think a Grab in Singapore, GoTo, and so on and so forth, or even a WeChat in China, where you have financial services starting with payments, but also others that have been added on top of it and fully embedded into the user experience. So this rebundling is a trend that has really only just started. And the reason for that is because it's now so far only been the big apps, the big ones with a lot of money that have been able to do it because you are tapping into regulated terrain. And for a lot of medium-sized apps or even smaller apps, this has not been possible to tackle so far. But essentially, we see most of the apps bringing one or in some ways financial services into the user experience, and payments and e-commerce is just the beginning. Yeah, so I guess one of the things that is actually very interesting, and if you think about the overall space here in emerging markets, we have millions of people that use e-wallets, right? And like I'm talking about regulated e-wallets right now for a moment, with fiat currency in it, and the average balance of stored value in these wallets in Asia Pacific is around $5. And the reason why this is so low, there's many reasons, but one of them definitely is because a lot of these e-wallets, they lack interoperability. So you cannot combine funds from different e-wallets and aggregate your purchase power. And that's a problem that actually is very significant in markets like Africa, East Africa, where you have like different e-wallets provided by different telco providers. And unless you swap the SIM card, you won't even be able to access it, right? So this is a real issue, and basically, you know, limits what you can purchase. And then the other thing is that a lot of e-wallets are also fairly restrictive in terms of or limiting in terms of what you can buy and do with them. And I know, like, I mean, in Singapore, Grab has done a phenomenal job, and so did others in other Asian markets. But again, when you think about a truly digital world that is borderless, like as we know it from crypto, right? Every ICO in the past basically was nothing else but a peer-to-peer transfer in a borderless fashion. Digital wallets are not there, and they're way, like, it's a long way to get there. And even if you look at some of these super apps like a WeChat, like a Grab, it is very difficult for a foreigner to actually onboard, because you don't have the local KYC requirements. You may not have a local phone number. There's always one or the other issue that makes it very difficult. And as a result, it's very difficult to build products on top of that are truly borderless. But long story short, where we see a lot, and this is in a way that the nice thing about crypto, that it has really shown like the power of a borderless world when you can financially connect people from all walks of life. What we now see happening is with, like bringing additional products into these wallets. And that's kind of what I tried to illustrate here on the screen. So let's say you have a typical e-wallet that is a regulated e-wallet where a user stores value. And let's quickly think about a user that lives in the Philippines or Indonesia. They're not familiar with crypto. They know Philippine pesos, and they've used this e-wallet and they trust it. Trust is a very important aspect here, and they know how to use it. So it's also the convenience element. Now, what is really interesting is when you start to open up the opportunities from this stored value with microfinance. And now I'm quickly giving you some examples of CeFi opportunities. Microfinance is super interesting for these people because you can, as an example, if you think of a short-term travel insurance, a 3-day travel insurance as an example, it's something that seems, kind of a no-brainer. You can reach new people in all these markets if you're an insurance company, but actually the distribution is very difficult. The cost to distribute a microfinance product is usually higher than the margins you make, and unless you work with a remittance company and upsell it, etc., it's almost not possible to do it. But the real challenge comes when there is a claim disbursement from an insurance product. So now you need to figure out how you're sending a $50 claim back to that user in the Philippines to an e-wallet, right? So all this overhead is one of the main factors that prohibit really the scale of very powerful and useful microfinance product, even in the CeFi world from traditional insurance providers. We have products, insurance products, and specifically lending products in the DeFi world, which at first sight, it looks like, okay, that's the solution for these e-wallets, but in most cases, actually it isn't. And there's a couple of reasons for that. The loan or micro loan products, whatever you want to call it, in the DeFi world, don't serve the same purpose that a traditional loan product serves in the CeFi world. If I'm taking out a loan, it's because I need money and I need it to pay for something. But if I want to take out a loan in the DeFi world, I have to put in a collateral, and typically it's over collateralized. So if I need $100, I can't put in $200, right? So a lot of these products, they serve different use cases, and we're still early, but it's still a long way until we are at the point where we can really bring these products to the users, to the mass users. In these emerging markets. And that's one of the things that we are really trying to address with Verso. And I'll show you that in a little bit. Now here we go. So what we have, and this is an example of Wallet Engine, which is like also a company that we have been building in the past many years. It's a regulated company that does in-app wallets, fiat wallets in cross-border apps and peer-to-peer payments. But what we now see happening, and this is really just as an example that's true for any other e-wallet, the ability to store value in an app is really the starting point. And the ability to store fiat value is really the starting point to get mass adoption in emerging markets with the average person on the street. And again, the ability to bring this in an embedded way into an app that is already used, possibly on a daily basis, makes it a no-brainer from a convenience perspective. A lot of these people, really, it's difficult to get them to download a new app, a new product, or even educate them about the new product. So where we see a lot of opportunity is bringing financial services in a fully embedded way into a user experience. But again, this is just the regulated world. This is just fiat money, where I think DeFi and other microfinance products can really add value to any of the e-wallets around the world is when you take it to the next level and you open up this stored value capability to additional financial products without the requirement for a direct integration by all the single service providers behind them. Overall, we have around 3,000 plus something e-wallets that are regulated in the world today. And if you're an insurance company, this could be super interesting, even if you're just looking at a few markets or as a Europe as a whole or a Southeast Asia as an example. But today you would literally have to integrate with every single e-wallet provider separately. You have to figure out the commercials, the contracts with every single party. It is very time consuming and difficult to do so. And that's where we see there is a lot of very interesting opportunities opening up from blockchain space without yet touching crypto. So the fact that you can, you can create smart contracts that take care of that interaction, that basically make it unnecessary to handle all the counterparty issues that you have if you're an insurance company. And on the other side, if you're having an e-wallet that is able to also consume these smart contracts, then all of a sudden these e-wallets can offer new products from CeFi microfinance to their users. They become more relevant to their users because these are meaningful products for them. And it's also really like the convenience factor that is super important and makes users actually consume these products. But then as a next level, you could use the same technology and the same, I guess, user adoption path to bring additional DeFi products into their world, right? And that's again where, and this is one of the first products that we're now pushing out with Verso is when you think of a user in the Philippines that has $20 in a wallet, if that user has the ability to put the $20 in a yield generating product, that is that is really a game changer because all of a sudden, irrespective of where you are and irrespective of the amount, you get access to products that otherwise wouldn't be accessible to you. Now, I know a lot of people say, crypto is really democratizing everything and it's like a great opportunity for everyone, but I'm still quite, from the emerging market lens, I would say it still takes a lot of education for people to use it. And just to put things in contrast, right? I think we have around 300 million users worldwide that use crypto, but we only have around 2.5 million unique addresses that have been used for DeFi products. So holding a crypto token may be possible to figure out these days by watching a few YouTubes, but how to put all this into a yield generating farm, I think that's next level, and a lot of people probably have not figured that out or just lack the knowledge. And then there is also risk. And I think this is one of the things that is very, very scary and the big, I guess, hurdle to overcome in emerging markets. People can lose money, right? I mean, if you're using one of these DeFi products and there is an error in the contract, as an example, or you do something wrong, you send like a token to a wrong blockchain and you just burn it. This is nobody that can help you. You can't get it back. Nobody you can call. And these stories, they are real. People have lost money, and it's scaring people. And I think that's where we need to be very conscious about the fact that we need to figure out the way how to bring DeFi into products that people are already used to basically add it to the experience, to the user experience there. And that's also like not just in terms of trust, but it's the convenience element that also drives the adoption. So that's really one of the things that we are trying to do with Verso. And what some of our team has done recently, we've put together this map just as a starting point. But when we already start to look at the three kind of product verticals, the loans, the insurances, and the yield products today, and we kind of look at them from which are the providers that provide them from a CeFi perspective. So there's a lot of the traditional players that provide microfinance, like an AXA insurance. And they need to find ways how to deliver microfinance into e-wallets in a cost-effective manner. And And then at the same time, we have the newly emerging DeFi side with products and companies or service providers that have great products, and they're truly borderless. They also work in a micro fashion. However, they are running on crypto, and that is at the same time a big kind of challenge for a lot of the regulated e-wallets. So this is really where we are trying to come in with Verso and building this bridge. Verso is not, we are not building a product. So let me just put that out there. We are not building new DeFi products. We are a marketplace. We are basically a financial product marketplace that connects CeFi providers, like an insurance company, like a lending company, to regulated e-wallets. That's essentially what we do. And the platform is built in such a way that it can handle microfinance products, CeFi products, but at the same time, DeFi products. And this is super interesting because, like, what we've seen in several conversations is that there is actually very innovative products that can emerge once you're able to combine CeFi and DeFi in a simple way. I'll just give you one on top of my head. In the insurance space, there are several insurance products that wouldn't work for a traditional insurance company to underwrite, simply from a risk perspective. Now, if you could combine the underwriting piece from DeFi and the remaining part through CeFi from the insurance, and the insurance is still the one selling the product, you would really have like new opportunities again for people who are holding assets in DeFi. Yield, in that sense, an opportunity to generate yield. And at the other end, you have a new product that covers a case that otherwise couldn't be covered. And that's something that can be very meaningful for people who, who may not want to lose something that is of value to them. So Verso is really the bridge between DeFi, CeFi microfinance, and regulated e-wallets. So again, I focus on the regulated piece there. We're building this for the regulated industry. It's all about reputation here. Again, coming down to trust, convenience for the end users. And yes, essentially bringing the worlds a little bit closer together, and hopefully making financial products more accessible and meaningful to everyone, and not just, in quote, the geeks are the ones that get excited about DeFi, and the ones that can afford it through premier banking relationships. So really trying to kind of bridge that gap and get these worlds closer together. So I think those are the slides that I wanted to cover. I think time-wise, yes, I'm pretty much out of budget as well, but I'm sure there is a bunch of questions or comments. So happy to answer or share some other thoughts on that.